If this is your first time to Blab, man, up in the top left, you can hit the tweet button, and now to send out to all your tweeter friends that we are here in the building having a conversation about money. Also, you can post to your Facebook. Just hit the little post to the F, and now to send to all your Facebook friends that you're here. Maybe there's some people in your network that want to talk about money tonight. It's MLK Day, and one of the things that MLK was getting to was the economic impact. And so, we're going to talk about economics tonight. I got a couple things to discuss, and some things just keep coming up. So I'm just, I'm the type of guy, I like to just go with the flow. And that's just what it is. So I'm pretty sure, see what happens when I start talking about money is you're going to start seeing a whole bunch of people coming to this blab because, money is a hot topic. People love to talk about it. And some of the things I'll be talking about tonight is going to be the sentiment of the market. I'm actually going to also talk about some of the things that you need to consider before you quit your job. I'm also going to talk about a few tickers. I've got up there Walmart, Chipotle, Apple, the Dow Jones Industrial Average, and S&P 500. If you guys ask me questions and they're out of the realm of context, then I'm probably not going to answer it because I don't want to be on here. Typically, if I get on Blab, then we blab and it'd be like 2 hours. And I don't want to be on here 2 hours a night because I still got other work that I want to do. A little bit about me. My name is ERGJ. I'm a certified financial educator. I also teach people about how to invest, and I teach them about the stock market. I'll be doing a little bit more of that, but I've really been focusing on educating the children. I saw this cool post that we had on, I guess it was like a week ago. We had some twins that were talking about stocks, and they were talking about Disney. And I was like, man, it's very interesting that we can got kids that are talking about investing, and we still don't have adults. We still have adults that don't even understand investing. And that's a good thing and a bad thing, right? You got to start them early. Start to get to understand how to make their money work for them. And maybe it's just a new generation that is more inclined to have the awareness or be available to them to learn about these things, or maybe technology has now brought it that they can go find it on their own for whatever reason. It's a good thing when the kids are learning early things that they can do to build wealth, because the earlier that you start, then the more then you have an advantage because time is on your side. In case you guys don't know, the way this thing works is it works with time, compounding time after time after time. This is how you build wealth. So the earlier that you can start your kids, then the better. So one of the first things I want to talk about is something that you should, what you should consider before you quit your job. So I just had a question that came in on on another platform, was asking me about how do you roll over a pension? How do you roll over a pension? And I was like, roll over a pension? What are you rolling over a pension for? And they were like, hey, rolling over a pension, they left their job and they're going to be starting new employment and they want to roll over their pension. And I was like, well, usually you don't roll over a pension, usually you're going to take a lump sum out and you might put it into an IRA, or just kind of depends on where you are. And so they were like, well, they're not fully vested, but they do want to take their money with them. So one of the things is you have to understand, I think it's important that you understand what vesting is. What vesting is that there is a schedule that your employer puts out onto the money that they contribute to your benefit for retirement. And if you do not stay with the company long enough, then they won't pay you that money out. So they set money aside for the benefit of you as an employee, and this is direct benefit from the employer to go towards paying for your retirement when you retire. So the goal of the company is that you would stay with them until you retire. If they have a pension, which a lot of them don't now, they're switching over to 403Bs and 401Ks, and that the longer that you stay with the company, the more that they would contribute to your retirement, and it's supposed to be a win-win situation. Well, a lot of people are switching jobs quite frequently now, and so they're leaving before they are vested. Vested means that you are guaranteed that money. So if you leave before you're vested, then more than likely you don't get any of that money that they set aside, and it goes back into their pockets. In other words, they were giving you free money, you left before schedule, and then they take their free money back and they use it for their purposes because they still have other employees and other things to do. So you'll be aware of your vesting schedule, and if you can help it before you leave your job, if you're close to being vested, try to stick it out, because that's free money that goes towards your future. You're 3 months away, 6 months away from being vested. Can you put up with that job for 6 more months just so you can get this free money? That might be something for you to consider before you quit your job, because it's sitting there waiting for you. It could literally double or triple what you already have, depending on where you are, depending on how long you've been with the company, towards your retirement. So understand and know what your vesting schedule is, because this applies not only to your pension, it also applies to your 401k. So when your company is making contributions to your retirement through your 401k, in other words, you put $1 in, they match 50 cents. Well, that 50 cents that they contribute, that's on a vesting schedule. And if you don't stay with your company through the vesting schedule, then that money they have set aside that they've contributed to your retirement, it is not yours. The money that you've contributed, you take with you. That's your money. But the money that they set aside for you, it won't be yours if you do not stay through the vesting period. Does everybody understand that? Does everybody understand that? So that's something for you to, that's part of the financial decision that you make and that you should consider before you quit your job. If you're looking to move on, if you are employed right now, if you have an employer that has a, that type of benefit that would pay you, or that's matching, or you have a pension or anything like that, be aware that if you leave before you're fully vested, that you don't walk away with all your money. Some people, that's just, hey, they don't care about the money. Hey, I got to get up out of here. But some people, it's like, hey, I can deal with this for another 2 months, 3 months, 4 months, just so I can walk away with all of my money, so that I'm in a good position as I move forward to my next employer, and I have to take all of my money with me, or I roll it over into a 401k or something like that. Now, I know you guys are wondering, well, why are we talking about this, right? This is Stock Market Monday. We're supposed to be talking about the market. Well, in case you don't know, when you are investing it for your retirement, when you have a 401k or 403b or whatever you got, that is tied to the stock market. So when I talk about your retirement, it's still talking about the stock market. All of that stuff is tied to the stock market. Most people don't even know that. So one thing that I offer is a retirement review. So if you do have a 401k, or you do have a 403b, and you don't know what you're doing with it, then you need to reach out to me. We can set up a consultation so I can show you how to set that up so you can be successful financially. Obviously, we're going through some changes now in the economy, and knowing that we are going through some changes, you probably want to make some changes in your allocations. And if you don't know what's going on with the market, then how would you know what to do with your allocation? So that's a service that I offer as well. And I would recommend that you do it now, because it is the top of the year. It is that time that you really need to look at your finances and reevaluate everything. So if you haven't, reviewed your retirement, this is the time to do it. And if you need help doing it, then you need to reach out to me. You can find me here. You can find me on Twitter. Follow me, hit me up, DM me, follow me on Facebook, hit me up, whatever you got to do to get in touch with me. If you're saying, hey, this is the year I want to make sure that my finances are in order. And one of the things that I have is my retirement funds, and I don't know what I'm doing with it. I need someone to help me. Well, that's what I'm here for. So the retirement review is $97. And I'm going to walk you through so that you fully understand everything that's going on with it. And so that moving forward, you won't need any help. You'll know what to do with your money, because guess what? It's your money. And if you don't understand your money, then who else will? It's important that you understand your money. So Youthful Riz Biz, I might get to that. You got to put a /Q for any questions that you ask. I've got a few tickets I talk about. I haven't even looked at Tesla, but hey, we might talk about it tonight. I don't have a whole lot of time, but we'll see what we get to. So why am I doing this tonight, man? Typically I do like a Ticker Talk Tuesday, and every time I get on, people want me to talk about the market. And I'm like, man, listen, I got other things that I want to blab about, but it seems to be I'm the only one that's talking about money on these things. So I figured I'd do something special tonight, and I have a Stock Market Monday. So We do got a couple seats that are open. If you feel like you want to jump in and talk and share some thoughts or whatever the case may be, feel free. I don't really care. We're going to talk about the market. So I got a question the other day, and if you got questions, you can chime them down in the box below. I might answer them, I might not, just depending on what I feel like. But you can put a /Q on your question so it pops up, because I'll be talking, and guess what? I don't always see all of the comments, and if it's not in the /Q, I might, miss stuff. So she said the stock market's going crazy right now. Well, is it really? Like, crazy meaning what? It depends on what side of the market you've been on, right? So if you have been following and you've been kind of like, oh, it's going crazy, and you follow the trend, and you probably still been making some money. Too volatile to invest? I don't know about that. It depends on your investing style. Here's the thing, guys. You can make money going up or coming down. And lately it's been coming down. So the question is, have you been investing on the right side of the stock market? So it's important to know, when we talk about this, it's important to know or understand what your investing style is, because some people say I'm investing in the stock market. They're only investing long, meaning that they're expecting for the stock market to rise or whatever position they're in to go up. And so if that's your side of the coin, that's your position, then yeah, you're going to feel like it's going crazy because a lot of stuff is going down. But if you are a flexible investor, and you're the person that says, hey, I'm gonna go with the trend, I'm gonna go with what's going on, I'm gonna recognize sentiment, and I'm gonna recognize what's going on, then you can say, hey, when it's going down, I'm going to bet on it going down, and I'll make money that way as well. So this is a huge opportunity over the past month and a half to be short on positions or to be in put positions in the option chain. Even if you just did it on the market itself, on the Dow Jones, and you bet that the Dow Jones was going to decline or depreciate, or you bet the S&P 500 is going to depreciate, you would have been making money. So there are general statements out there that you say is volatile. Well, it's only volatile because people have some fear in the market. When there's fear in the market, it means that the market is typically going down, and that's the sentiment. So if you understand the sentiment, then you can still make money no matter which direction the market is going. That's called being a good investor. Now, what happens when the market is going down? Well, we typically start to find some positions that are undervalued, which means that undervalued means that, hey, we might find some diamonds in the rough, or we might start to see some companies that are on sale that still have great value, but they're caught up in throwing the baby out with the bathwater. So I'm going to talk about one of those companies that I believe is extremely valuable tonight, that has had some decline, but it still has great value, and it brings back value to the marketplace, that I believe that it's at a deep discount as we speak. So I'll actually talk about one of those companies tonight as well. So first, I guess we can start by looking at what I'm going to do tonight. Is I'm pretty much do a little bit more just technical analysis. It's bargain shopping, right? I mean, who doesn't like to bargain shop? Who doesn't like to buy stuff that's on sale? Who doesn't like to buy things when they're on sale? So if you are, if that's you, but then the question is, okay, well, it's not about knowing, because no one knows, right? No one knows when something's going to be at its bottom. The goal is to buy it when it's at a value, because even when you buy it at a value, it might still go down a little bit, but you felt like, hey, I bought it at a great value. So you've caught it at a time where it's generally decrease as much as it's going to decrease, right? If that's the case, right? So you say, hey, I want to buy it at a good value. You may never catch it at its bottom, but you might say, hey, if I'm a person that likes to buy long and I want to get into something for the long term, and I believe that eventually this particular asset is going to rise and I'm going to have much appreciation over a 2-year span or 3-year span, then I'm comfortable buying it here because I see it as great value right now, even though it might still have a few more days or a few more months of decline because of the market itself. But I bought a great company at a great value, and I believe over time that this company, this asset is going to make me money. Even though I might lose a little bit on the paper side right now, I still bought it on sale. So those are the things that as a long-term investor, I look for. I look for things that have great value, that I can buy on sale, that I believe in a year or 2 years from now is going to give me a great return. It may not be tomorrow, but as a value investor, that's what I look for. But you could also do it the other way. You can say, well, hey, I'm not a value investor, and I am a person that wants to make money today, tomorrow, and the day after. I want to be a day trader, swing trader, where you can say, well, I'm not going to go long on this particular asset. I'm going to follow the trend, believing that it's going to continue to decline, and I'm going to go short on this position and make my money for the next 2 days or next 3 days or over the weekend, not over the weekend, but something like that, right? That could be a position that you take. So it's all about what type of investor that you are. The type of investor that you are determines the type of positions that you take. I'm a value investor. I'm a long-term investor. I look to buy things low and sell them high. But I also know how to buy things high and sell them low. And that's actually called shorting. That's called being on the opposite side so you can make money on the way down. All right, so I know I'm going a little bit, and I'm like, I didn't really want to talk about all that, but I think it's important to kind of discuss because I don't know who's watching today. I see we have Ms. Divinely Favored is here. I see I've got Trish Bender here. Thanks for joining. Paris is in the building. Maybe you're going to join me live today, Paris. I got R, Youthful Real Viz, your millennial vision. You must be really into investing. I know you had a couple things you had to say. They're new as tech. I've seen you before. Carl Goodall in the building. Parul and Cooking. We got a few visitors as well. Hey, all right, Ryan. That's cool. Nice to meet you, man. So Ryan, how long have you been investing, man? How long have you been into the markets, following the markets, things like that? Just started. Okay, cool. Motown is here in the building. So of course, guys, you can always, I've seen some people have already hit the little tweet and told your Twitter friends that we're here. Feel free to do that at any point in time. And also, you can post to Facebook and let them hear. So where I wanted to start was, I was looking at, first I want to start with S&P 500. Taking a look here and looking at it from a technical standpoint. I'm just going to use very simple stuff today. For me, it's simple. It may not be simple to you, but I'm on Yahoo Finance, and I'm just looking at charts. That's all I'm doing, and just trying to get a gauge of what's going on in the market, right? So the S&P 500, I'm looking at a 6-month chart. I'm looking at the last 6 months to see what's been going on with the S&P 500. I see that it's been trading pretty much sideways, but it's been having a huge variance, man. So back at the beginning of the year, we were trading at about 2,100. From about 2,100 right now, we're trading at 1,880. But we've seen it go up and down throughout the year. Basically, back in August of last year, we were at our lowest point in the past 6 months, which is about 1,867. We saw that kind of hit that 1,860 mark twice. We saw it in August, and we also saw it in September. Then it bounced and went back up to, I would say, normal trading, right around 2,000 to 2,100. It was kind of trading in that mark. And then recently it's dropped from the 2,100 mark all the way back down to 1,880. So when I look at this, I'm saying to myself that the next point of support, and guys, if you don't know what support and resistance is, it's basically if you draw the points from the highest point and perpendicular and also the lowest point perpendicular, that kind of gives you an idea of its ceiling and its floor. And so right now I'm saying, hey, its next point of support is going to be 1,857. That's the lowest it's been in the past 6 months. Now I can look at a year chart or 2-year chart, but I really want to look at this recent history because we've seen some recent activity in the market. We've seen China go through its thing. We've seen the retail sales and the holiday season that just passed, and we haven't even got those numbers yet. So we've seen some things that have happened recently. So I want to, me personally, I want to look at a more recent chart to see how that's impacted or the impact that it's had on the price of assets. And I'm not even looking at Forex. I'm just looking at a chart that I see. So the S&P 500 is what I'm looking at right now. So I'm saying support is at 1,857. And we're about to be moving back into an earnings season as well. And we're actually trading at a low point. And so I got to ask myself, with this earnings season that's coming up, it's going to be interesting to see which companies did well during the holiday season. It's going to be interesting to see which companies have done well during the holiday season. And if this blip on the radar is going to start to turn around. Or are we really heading into what someone said, are we heading into a recession? And I think this 1,857 area is going to give us a good indication of if it breaks this support, then get ready for a free fall. If it holds this support, then get ready for a bounce. And that's just my opinion. If it breaks this support, because this is going to be his third time testing this 1857, 1860 mark in the past 6 months. 3 times is a charm for me. So if it breaks, then get ready for a free fall. If it holds, get ready for a bounce. Everybody understand that? And to me, it's just something I've learned as I've been doing this for a while, and I've been watching charts. And in case you guys don't know, I was an analyst before I was in the stock market. So I read charts all day long. I forecasted all day long, and that's just my background. So I started to get good at looking at charts and recognizing, kind of getting an idea of what I'm looking for, and I just have applied it to the stock market. So for me, the S&P 500, if I was playing the S&P 500, if I was making investments on the S&P 500 as a whole, which is basically the 500 stocks in the stock market, then I'm looking at the 1857 or 1860 area to see if it's going to hold. If it's going to hold, I'm going to start to looking at call positions to get the bounce back on the S&P 500. And I believe that the holiday season earnings can be that catalyst to get us back to trading at 1,900, 2,000 in the stock market. But it could very well not hold. And if it doesn't hold, then I'm going to stay in my put side, or I'm going to stay on the short side of the market as a whole, and believe that we are going to start to fall, or in some people's eyes, they will say we'll start to crash. There are a lot of things that are going on. We know that Obama is leaving office, so that's a negative sentiment. That's fear in the market. That can cause a lot of volatility. We're heading into that right now. So it could very well be that the holiday season earnings won't turn around the correction or the fall that we currently see. Does that make sense? And I'm trying to explain this. I don't know if I'm too technical or not, but I just talk the way I talk. So if you guys got any questions or anything like that. So right now I'm currently looking at S&P 500 as a whole. I'm looking at a 6-month chart. I'm seeing that it's tested 1857, 1860 area twice already in the past 6 months, and it's looking to test it again. And this test tells me the third time's a charm if it's going to bounce or if it's going to fall. If it breaks this support, then get ready for a fall. If it holds, get ready for a return. Now, the MACD, which is an indicator of momentum, is not ready to turn yet. It has not made a dip. And so I have a MACD that's going like this. It's going down. It hasn't even began to curve back up yet. So it's still falling as we move into tomorrow, and we'll see what tomorrow brings, but it hasn't even begun to turn. In other words, we haven't begun to see money from a positive standpoint move back into this. In other words, we haven't had very many positive days over the past week, 2 weeks, or month. Typically, the way that the MACD turns is you'll start to see a lot more green. So you'll start to see more money moving back into the market, more buying going back into the market. But we've seen a lot of selling, which is what's causing the sellers or the bears are winning right now. They are the dominant force that's going on in the market. And we also see the sentiment, which is fear is the dominant force that's going on in the market right now. Fear brings volatility. There's two different emotions, fear and greed. Fear means people are selling, means the bears are winning. Greed means people are buying, which means the bulls are winning. And right now, on the market, the bears are winning. So for me, I'm saying I'm not going to bet against the bears until I see some momentum change. And I haven't seen that yet. And I don't see that happening here when I'm looking at indicators that's saying that it's even about to change. So I do believe that we'll be testing this 1860 support over the next week or so. I mean, we're at 1887 now, so I wouldn't be surprised if tomorrow, when the market opens and people get back after the holiday, that we will. Hold on a second. Okay, yeah, I won't be surprised that if we hit this, if we start to test this 1867, 1857 range tomorrow. I mean, it's man, last week it dropped 41 points. So we're only looking at 20 points to get to to get to test its levels, which is right about 1860 or so. So I wouldn't be surprised there. So that's my thoughts on the S&P 500. I believe we're getting to a point of support. That's going to really let us know, because it hasn't been in this range, guys. I'm looking at a 1-year chart, wasn't it anywhere in this range of the past year. The last time it was in this range of where we are looking to trade was back in October of 2014. So this is the last time we were trading in the S&P 500 in the 1860 range or so. China is having a tough time, and this is the second time in the past 6 months, past 9 months that we've seen a lot of volatility in the Chinese market, which is a huge economy. So do I think that typically, what did we do last year? Last year, when we had the Chinese New Year, that's when Alibaba was big, and we had a lot of influx that came from the Chinese New Year. I still believe that people are giddy around the New Year, and they'll still have their sales and have their buying. But China, that could be a temporary blip on the radar. China is struggling right now. So will the new year be a catalyst for change? I would think temporarily, but I don't know how long it can hold. I don't really know how long it can hold. I don't know how long it can hold. So that's, that's one of those we have to see. Would I be putting my money or betting my money on some Chinese companies during the new year? Probably only some of those retail companies, but I wouldn't have much faith in them because I don't know if they can hold. And it depends again on your style. If you're temporary, if you're a swing person, then you'll take a wouldn't have a problem taking a swing. If you are one of the long-term people, then you might want to wait a little bit longer and wait until you start to see at least some momentum change. And that's the thing, guys. Like I don't really care about all of the events. What I care about is price, volume, and momentum. I want to see momentum change, and that is shown to me on the chart. So until momentum changes, I'm not really interested in taking a gamble on something, hoping that the momentum change. I want to see it change first, and I'd rather get in on the kind of the back end of the change or the shift than to try to get in on the front end and it never shifts. That's just how I operate. I mean, I'd rather just wait. And we're going to see that as I look at this and look at the Dow Jones Industrial. It's funny because the S&P 500, as we're saying, I'm not seeing the momentum changing. So I'm still seeing, as we speak right now, it's still continuing to decline. Now, when we look at the Dow Jones Industrial Average, which is the top 30 companies in America, its last report was down 390 points. It went from 18,000 to 1598. Now, when I look at the Dow Jones, I'm gonna look at that 6 month, its 6 month chart as well. Okay, I answered your question. Again, guys, if you got any questions, feel free. I'm just going in, and hopefully some of the stuff makes sense. If not, feel free to ask. Feel free to jump into a seat. So I am looking at a Dow Jones Industrial Average. I'm looking at the last 6 months. Again, the reason why I'm looking at the last 6 months because we've had a lot of activity. We had a lot of news. We have a lot of things happen in the market over the past 6 months. So right now it's trading at 15,988. Its last day of trading, it lost 390 points. It's a lot larger. It houses the top 30 companies in America. What I see here is that very similar. We're not testing its low point of the past 6 months, which is at 15,666. So we got another 300 points in order to start testing its support over the past 6 months. But what I saw that was different with the Dow Jones it has a very similar chart to the S&P 500, but I'm really actually starting to see it try to turn on the MACD. It still isn't there yet. So I believe we're still looking at some bearish days coming up. That's the best way to put it. Looking at some bearish days that are coming up, but I'm waiting to see with some of these big companies what is really going to start to happen. 16,000 is a pretty good support, but I'm really looking to see if it's going to come back and test this 1566, which happened again back in August of 2015. So very similar to the S&P 500 is the Dow, and they really do kind of mirror one another. Like, if the Dow is up, it's very hard for the S&P 500 not to be up, because pretty much the Dow, the biggest companies in the world, they carry the market. So if you are looking at some of the biggest companies like an Apple or something like that, they really are carrying the market itself. So you're going to see very similar charts between the two. The only difference is obviously we got 30 companies that we're looking at versus 500 companies. And 500 gives you a broader perspective of what's going on in the total market than just the top 30 companies or the top 30, the industry leaders of the American economy. So the Dow Jones, again, I'm really looking to see. It looks like we already broke the 16,000 mark. It looks like the August time of 1566 is the next test. We haven't had 3 consecutive bullish days in the past month, it looks like. So we are in a bearish market. Someone else said that yes, we are in a bearish market. Sentiment is fear. So for me, I am going to be on the put side. I'm going to be on the sell side. I'm going to be on the short side of the market, looking to gain money by betting that it's going to continue to decline until I see momentum change. That's just for me. So I'm looking at a MACD that isn't ready to turn yet. But as we look at some individual companies, we're going to see some differences, because even though the total market may not be ready to turn, and you may be a person that just plays options on the total market, we do have some companies that might be looking to turn from an individual standpoint, because individually we are investing in companies, or you may be an ETF person that's investing in like an array or a basket of companies. It just depends on how you invest. So again, the Dow Jones Industrial Average, I'm still looking to, over the next couple of days or this week, I'm still looking at a bearish week. I don't see it turning just yet, but we are getting to a point of support. And this support really tells us, are we looking to bounce back, or are we looking to fall through? We've seen a fall. We've seen it go from 18,000 to now 16,000. That's a correction. That's not a crash. That's just a correction. And it's been there before. But we're looking to see if it holds support, if it will bounce back and everybody be giddy again, or if it's actually going to fall through the floor and we're going to be looking at testing some crash waters. And guess what, guys? Even if it does test crash waters, you can still make money. It just that's how the market is. There are more millionaires made when the market crashes than there are when the market goes up. I'll repeat that again. More millionaires are made when the market crashes than when the market goes up. Why? Because they're on the right side of the market. They're investing on the right side of the market. And it's easier to fall than it is to climb. Again, it's easier to fall than it is to climb. So once you start to look at charts and you understand them and you're looking at them and it starts to make sense to you, then you can say that, hey, if I see that the market is falling like we've seen over the past, I don't know, what is this, week or so? Since December, so in the past 2 weeks, then, if I'm a long-term investor, I can just not invest. I can just wait. Or if I'm a swing trader, I can get in on the short side and make some money. It depends on how you invest. If it's falling against you, then go conservative. And this is what I tell people, especially when we talk about your 401ks and your retirement fund. Guess what? You can't go short in those retirement funds. So that means that you need to get conservative when the market is going against you. These are the things that I teach people in my retirement review. So again, if you have retirement funds and you do not understand these concepts, then guess what? You can pay me to help you. That's right. I'm soliciting for you to pay me to help you. That's right. I'm a finance coach. So I'll walk you through the things that you need to look for so that in the future, as you allocate your funds, which hopefully you're at least revisiting every year or every 6 months, it'll start to make sense as to why sometimes your 401k is up and sometimes it's down, and what you can do to keep more of the money that you have invested for your retirement. See, most people don't even look at their money, and then they wonder why when they get ready to retire, it's looking very skinny. It don't look like a good piggy bank because they haven't been paying attention to their money, and they don't understand that their money is tied to the market, and therefore they haven't learned about the market. There's plenty of people that have no idea what's going on in the market. They just put their money in the hands of someone else in hopes that someone else is going to make them rich. And I'm telling you, I think that's a bad financial idea. At least understand it, even if you put your money in someone else's hands. So if they make a bad decision, you can tell them, no, that's not what I want to do with my money. Because guess what? It's your money. They can give you advice, but if you begin to understand how money works, then you can make sure that the advice that you follow is sound for you and your money, because ultimately it's your money. You can't depend on someone else to make you rich. All right. Does that make sense? I don't know. To me, it makes sense. Like, it's my money. It's my retirement. I want to take control over it. And even if I pay someone else to control it, I still want to have an understanding of it. So that way, it's my decision, right? It's not like, I can't blame them for me going broke. I can only blame myself. So I need to understand what's going on with my money. So anyway, so we talked about the S&P 500. We've talked about the Dow Jones, and now I want to look at Walmart, right? So Walmart is pretty hot stock. People are talking about it. Obviously, they had layoffs. And so when I began to look at this chart, over the past year, Walmart has basically lost 28% of its value. Over the past 6 months, they lost 16%. But here's what I found with Walmart. I found it very interesting. If we look at Walmart from since November of last year, Walmart has actually been appreciating. So all of this bad news with Walmart, actually ever since November of last year, which is right before holiday season, Walmart was trading at $56. They're now trading at $61. So they actually, since November, have actually appreciated in value. Although there's a lot of bad news about Walmart. I found that very interesting because over the past year, it's lost 25%. Over the past 6 months, it's lost 16%. But over the past few months, it actually has gained, 5% or something like that, whatever that number is. So with all of this stuff that's going, it's actually gained over the past 3 months, it's gained 5%. So isn't that interesting that if you would have jumped into Walmart 3 months ago, you would already have a 5% return or a 5% appreciation on your investment. Although all of the news that's going on Walmart now is bad, although over the last day it traded, it lost 2%. 3 months ago, if you would have invested in Walmart, you would now have a 5% appreciation on your investment. Isn't that interesting? I thought that was very interesting. Am I the only one that think that's interesting? Well, all the bad news of Walmart, all the bad news that's going on with retail, but Walmart would have brought someone a positive return over the past 3 months if someone would have invested in Walmart. That is not a huge return, but it's an appreciation nonetheless. Is anybody? I feel like I'm talking to myself. If I'm talking to myself, I might as well get off blab because I like interaction. So, okay, all right, thank you. Let's get money. Appreciate it. Okay, I got some props. Okay, because if I go parch and I don't get no props, that's gonna be a problem. Yeah, so all of those patty pies, right? Those patty pies was a huge boost to the Walmart sales. And we haven't even gotten, again, to earnings season for Walmart. So if you guys remember, last time I did a blab, people laughed at me when I said that, hey, I think that once earnings season comes, Walmart is going to what? I said that I think that they are going to actually start to appreciate. It started in November. I think the last time I did a blab was back in November, and they've actually been appreciating since the time that I probably spoke. Now, it didn't make any sense at the time because obviously Walmart is retail. Now they have closing stores, but what is Walmart really doing? They are working to become more efficient. Walmart is paying more to their employees, which means that they can't have as many employees, which means that they have to have the employees that they do keep do more work because they are paying, right? And also, Walmart is one of the few retail stores that has a huge online presence. And so what I said back then was like the retail stores that have a huge online presence, I believe will succeed, will thrive, will stay alive. And Walmart just happens to be one of those companies that has a huge online presence. They're not just based off of their brick and mortar store like a JCPenney or Macy's or something like that. They have a huge online presence. Many people are shopping shopping with Walmart online, which is helping them to stay alive. So yes, they're competing with Amazon. They're competing with an Alibaba. They have everything that you could use or need or want, and you're able to get it by going to the store, or you're able to order it online. So I just, they have an online presence. So I was a believer in Walmart, me personally. You said it hurt it gaining because of an anticipated recession, but if the market rebounds, will this still be the case? They're also opening a lot of stores and closing a lot of stores. Yes, right. So that's the funny thing, Ryan, is that when the report came out about Walmart, everybody focused on the stores that they were closing, but not many people were talking about the stores that they were opening. Let me repeat that again. When the report came out about Walmart and the employees and all of this stuff, all this bad, negative information, and people were talking about all of the stores that they were closing. Not many people were talking about all the stores that they are actually going to be opening. And so they're actually expanding their reach by reaching to some of the rural communities and some of the communities that don't have a Walmart. They're building smaller stores so they can have more stores, and they're becoming more efficient in their not in their demographics, but in their map. If you look at a Walmart right now, I'm in Atlanta, Georgia, they're like Waffle Houses. You got a big one, a small one, all right down the street from each other. So they're reallocating their resources to be more efficient and to reach more of the population in a, I don't know what to say, like in distance or whatever, whatever, there's no point in having 3 Walmarts on the same street. You know what I mean? So, and plus you have Walmart and you have Sam's. At some points you can have a Walmart and a Sam's in the same parking lot, in the same strip mall. So at any rate, the point is that I was just saying that even though Walmart, all this negative news, they actually have grown or appreciated, their asset has appreciated over the past 3 months. But if you listen to the news, you would think that they have declined, that they're not doing well, that they haven't done well for the past year, but you would still think that they're not doing well. It's not a good investment. And in reality, it actually could be a good investment. For the past 2 days, they've been trading. The Bulls have been winning in Walmart. I expect that to continue. I see that their MACD actually is still trading above zero. They still have a positive MACD, and they've been in a positive MACD since December. They finally crossed it in December of last year. So it started in November. Money started moving back into Walmart. The big money, the people that moved the market started moving back into Walmart. We seeing a 5% increase or a 5% appreciation over this time. And now we're starting to see the MACD follow the money, which means that, to me, that momentum has shifted in Walmart, even though we're still hearing news about Walmart. The money tells me that money is still going into Walmart. Now, when I look at its a PE of 13%, that's still value. I don't consider that great value. I like to see it at 10 or 11, but I still see it as undervalued for one of the top companies in the world. So if you're saying, hey, I'm looking for value, and I'm able to get Walmart right now at $62 a pop. At one point, I was able to get it at $56 a pop. For one of the largest companies in the world that employs the most amount of people, that knows how to get the most out of every one of its dollars. Walmart could be around $60, $58, $60. You might, Walmart might be something that you might want to look at. They pay a dividend as well. So even if you have to wait it out, you're still getting paid. I'm looking at Yahoo Finance right now. I'm looking at a 6-month chart. So the reason why I brought this one up is because even though all of the sentiment, even though all of the news on Walmart is like bad, they over the past 3 months, they still have made some people some money that are along Walmart. And we see here that it bottomed out at this point at $56. It started to return, that you could be looking at great value in the Walmart stock at this time. And even if you wanted to wait and see what it does, but it has had its big drop off, and I don't believe it's going to have a bigger drop off. And I'd be interested to see when February 16th comes, which is their earnings date. I said this last time. I'm going to say it again. I believe that Walmart is going to beat earnings. They're going to surprise people, and they are going to make a statement in February. So just mark my words. We'll see what happens. You know, I'm not telling you to invest in Walmart at all. I'm just telling you, I believe that they're going to beat earnings. I believe it's going to be a surprise beat with the momentum of the patty pies, with the momentum of the holiday shopping. People didn't stop shopping at Walmart. I guarantee you that. With them becoming more efficient in their with their resources, with their labor, with understanding, hey, we agreed to pay people more money, so we're going to have people paying. We're going to pay less people more money. That's just what happens, right? We want to demand at higher wages. What all that means to the people that own the business, we're just going to pay less people more wages, and we're going to have them do more work. That's all that really means. So you don't get rich by demand. So, you know, if you want to get paid more, we'll do more and become more and climb the corporate ladder or start your own business or whatever. Why am I talking about this? I don't know. Let's get back to the charts. You said, what do I keep saying, Cookie? What do I keep saying? And I said it before, right? Who was here last time I talked about Walmart? And I'm not saying I'm right. I'm not saying it. I'm just saying I did say this. I think I said this. I remember. It's recorded. I can go back and listen to it. so anyway, so the reason why I brought that up, and I wanted to bring up this chart because even though there's bad news, does not mean that it's a bad investment. Even though you know, some people choose to look at one side of a story and not the whole story, you can still do your research and find great value even when the market is on the decline. And what I'm saying is I believe that Walmart is a good value, and I think it'll be even better value in the $58 to $60 range. That's what I'm saying. Everybody got that? Write it down, take a note, take a picture, whatever you want to do. That's what I'm saying about Walmart. Anyway, any questions about that? As you guys know, man, I just like to have fun. That's what I do. This was a spur of the moment type of stuff. How come I only got 30 props? I've been talking for 45 minutes. I don't even have at least a minute of prop, and you guys want me to keep on talking about stocks. Okay, I'm just saying, because I'll shut this thing down. All right, so we talked about the S&P 500. We talked about the Dow Jones Industrial Average. We talked about Walmart, which had a little bit different chart. And of course, an individual stock will have a different look and appeal to it than you will have when you look at the total market, which I looked at the S&P 500 and I looked at the Dow Jones Industrial Average, and we just looked at Walmart and we saw a difference. While the rest of the market was going down, Walmart has actually been going up. Isn't that interesting? Even if it's a little bit. But I'd rather be in a place where I'm getting a little bit while everyone else is losing a lot. Does that make sense? And this is what I teach people, and this is what I talk to people about with the retirement review. Yeah, you may take a chance and not gain whatever, 18, 20%, whatever. But guess what? When everybody is losing, at least you're not losing. And that's how you win. You take your gains when your gains are there, and you go conservative and make sure you don't lose when everyone else is losing. And that's how you win. You win when everyone else is winning, and you don't lose when everyone else is losing. Let me repeat that again. You win when everyone else is winning. For the past 6 years, 7 years, the market has been booming. That's the time when everybody was winning. Well, when the market turns, you want to make sure that you're not losing when everyone else is losing. And that is how you win the money game. Does that make sense? Hopefully that makes sense. I mean, I'm thinking, to me, it makes sense. It came out of my mouth. I want to make sure it makes sense to you. All right. So what else we got? We got CMG. Oh my goodness. Yeah, I know you guys are going to love talking about CMG. You guys got any questions, man, feel free, man. I'm just doing this for fun, man. I'm doing this to help. Hopefully, you guys are making sense. Hopefully you might be on your PC looking at some of these charts. If you're not, it's kind of hard. Aren't we due for a major correction? Is that a question? Are you asking me that question, really? So okay. Let me say this again. We've been ever since 2009. We have been in a bull market. That's 7 years, right? And last time we had a correction, a major correction or a crash, whatever you want to call it, was in 2008. Before 2008, when was the last time we had a major correction? Anybody know? .com. Anybody know the year? When was that? What was .com bubble? 2003, more like 2001, 2001, 2002, right? So we saw 7 years of plenty, right? And we saw a bust, right? Then we have another 7 years and we saw a bust. And now we're into our third 7 year of plenty. So are we due for a major correction? Absolutely. Now, here's the funny thing that I find that is tied to these corrections. It's the changing of the guard. 2001, new president. 2000, new president. 2008, new president. 2016, 17, new president. Changing of the guard. Is it a coincidence that when there's a change in the head of the state and there are going to be new policies and fear, and nobody knows what the next person is going to do or what, because they talk all that junk during the debates, but what happened when they get in office, we don't know what they're going to support. Isn't it a coincidence that when we have a changing of the guard, we have a change in the economy, at least a temporary one? So are we due for one? Yeah, absolutely. Will we get one? I truly believe it, yes, because it's shown me over the history that when we have a changing of the guard, we have a change in our economy, and we have a change in our economy that drives fear into the market. When there's fear in the market, people sell, and when people sell, the market corrects. Because why? Now you got to ask yourself, why does the market correct, right? Well, because the things that were valued when the old guard was in office aren't the same things that are going to be valued when a new guard becomes in office. That is the volatility that we're going to see and that we're starting to see, because guess what? The current guard is not really going to be in a position to support any new ventures. He's on his way out. You know what I mean? He's just trying to finish up what he started, but it's not like he's going to be really passing any new laws or putting money aside for any new so then again, at the end of Jimmy Carter's running office, right? So we're talking about a changing in the guard. So it's not, I don't really like to call it a correction, right? It's just a sell-off. There's a lot of things that happen. Obviously, when you have a huge, it's just like when a CEO leaves a company, right? When a CEO leaves a company, there's a change, there's fear about that company. When Steve Jobs died and he left and they turned over to Tim King, there was volatility in Apple, and people sold Apple and didn't know whether Tim King was going to be a good CEO or not. And then once they had belief or faith in Apple again, they started buying Apple and Apple took off. So what is /Cook? You got to do /Q if you want a question. And so it's the same thing with the economy. When the head of the state is going to Tim Cook, when the head of the state is going to change, people don't know whether the new guard is going to be somebody that they can believe in, somebody that's going to support the mission of the old guard, which more than likely they're not. More than likely the new guard is going to put money in other places that the old guard didn't put. And that money that's distributed or supported those areas that the new guard supports, that's where the money is going to start to flow. But we don't know what those areas are right now. So that's why you see the correction. That's why you see the sell-off. That's why you see people taking their money and pulling it out and saying, I am going to wait until I see what the new guard is going to do. Now, the new guard, it impacts not only the American economy, it impacts the whole economy. There's a lot of things that the new guard is going to have to deal with. We got the sell-off, we got the dollar, the devaluation of the dollar. We got things going on in China. We still got to deal with finding peace with ISIS and the Islam, all this stuff that goes on in the world. A lot of uncertainty causes people to say, hey, let me be a little bit more conservative with my money. So they start to take cash positions. They start to go to more defensive positions, like he said, utilities, things that people absolutely have to have. So just if you know that, this is what I tell people, if you know that change is coming, and everyone wants to talk about the market crashing and correcting, if you believe in your heart that the market is going to correct, then my question to you is, what's your plan for your money? I'm not concerned about what everybody else is doing, because everybody else ain't concerned about me getting rich. What I'm concerned about is what steps should I take? What precautions should I make with my money and my investments so that I can ride the wave and I can be clear as we go through these troubled waters? So ask yourself, are you on the Titanic and just going to sink with the boat, or are you going to get on a new boat like Noah's Ark and make it across while it floods? What is your plan for your investment? And will you learn from history? History tells us that a major correction is coming. Okay, well, we can talk about it all day long, but I want to know what you're going to do about it. Or you should want to know what you're going to do about it. Because again, you can make money going up, you can make money going down. So how you position your money is going to determine how wealthy you get during this time of turmoil, during this time of uncertainty, during this time of volatility. We just looked at a position, and why am I not getting a mini prop? See, y'all just listening, right? But see, while y'all listening, y'all supposed to be tapping the button. It's supposed to be like, tap, tap, tap. That was good. That was good stuff, Evan. Keep on going. Man, normally I have like 1,000 props by now. I don't know what's going on. Something, y'all ain't feeling it now. Maybe it's MLK Day. You know what I'm saying? Y'all ain't trying to hook up a brother. It doesn't repeat itself, but it rhymes. But you can learn. If you don't learn from history, then you're doomed to repeat it, right? But we can tell a lot from what we have seen, and we can make inferences off what will happen in the future. It's the same thing with your life. A lot of what you have experienced in the past shapes how you view the future. So a lot of what we have seen in the past kind of gives us an indication of what we can look to expect in the future, even though we can't tell the future. We don't know. But getting back to the charts, man. So we just looked at Walmart. Walmart is one of the few companies that's actually increased or appreciated over the past 3 months, while all of the other companies, or many of the other companies, have declined. Because the way that you get the S&P 500, the way that you get the Dow, is a combination of all the companies together, which is causing what we have seen, which is a decline in the market over the past 2 months. But Walmart over the past 2 months has actually been going up. Isn't that interesting? Patty's Pies, baby. Yeah, with sweet potato pie, baby. So anyway, so now we're going to look at Chipotle. Again, Chipotle, I'm looking at a 6-month chart, and I found this one to be very interesting. I don't know. I just picked some stuff that was hot to talk about. That's just what you got to do when you're on TV, right? You got to talk about some hot stuff. And so we're talking about, I just said, hey, let's look at Chipotle. Let's talk about Chipotle, because obviously Chipotle has had some rough times with this E. coli outbreak, which is obviously they're a food company. So if you're serving some fish that's got some viruses and getting people sick, that's not going to be a good look for your company. It's not going to be a good look for your value, your value as an asset. Extra E. coli on the side. So we've seen the rise of Chipotle, and the question that kind of comes up: are we looking at the fall of Chipotle? And so we've seen Chipotle trading at $750 a share. $750 a share. And this was back around right when we started to begin to hear about E. coli. It was back in the beginning of October. And since that time, it's traded for as low as $400 a share. So I found this to be very interesting, because if we look at the last 3 months, they've lost over 35% of their value. Yeah, I know that's right. They sent something over to them, right? They lost over 35% of their value. But the interesting thing that I saw when I look at this chart is over the past 3 days, past three trading days, past 3 trading days, money has started to go back into Chipotle. So right at $400 a share, people started to say, hey, man, this is still Chipotle. this is still a great company. I know they're dealing with some E. coli. I hope they figure it out, but we're starting to see money roll back into Chipotle. So 3 days ago, they were trading right at about $400 a share. They're now trading at $475 a share. Last trading day, they jumped up 21 points, which is 4%, 5% in one day. So we have seen money. We're starting to see money roll back into Chipotle. Their MACD just crossed, so now they're heading back up over the past 3 days. So there have been 3 bearish days in a row of Chipotle, and typically we'll see 5 when we have this type of momentum. So it's going to be interesting to see what happens over Chipotle over the next couple of days. But for many of us, we might have took our eye off of Chipotle because they've been going through so many troubles. Well, now we're starting to see money flow back in Chipotle, and I would expect over the next couple of days we'll still continue to see a couple of green days before we hit that little bump in the road where it's flat and it comes down a little bit. People sell off from the money that they made over the past few days, but we are starting to see a turn in Chipotle. Now, isn't that interesting? All of this bad news, this big drop off, but finally we're starting to see people say, hey, at this price, we find Chipotle to be valuable. Now, Chipotle is still a growth company. It's still, in my eyes, when you talk about growth company, you're talking about people that are buying into companies that have grown fast and have outgrown their earnings. But people still are seeing value as well, that people just love this restaurant, love this stock because it's done so well for them. But I wanted to point out that they are starting to turn the corner. So why do I say that? Because I told you guys that typically I won't buy back into a company until I see that it could start to turn. And so we're starting to see that people are buying back into Chipotle. So it's something that now I want to start watching again. Before it was just going down, so it was kind of like, well, hey, you might as well get on the put side. You might as well get on the sell side and ride the wave down. Well, now we see a point at which other investors are saying, hey, this is a great point to get back into Chipotle. So I'd be interested at this $400 mark when it comes, because it will come back down to $400 in my belief. If what it does next time it bounces, next time it comes to 400. If it bounces again, that tells me that's a great support. And if I am someone that is an investor in Chipotle, this is the area based off what it does next time it hits this semi-support, the area that I really want to be looking at Chipotle. I want to be looking at Chipotle right around $400. I want to see what happens when it gets to $400. If this was just a blip in the radar and somebody's boosting it, pumping and dumping, or if this is a true support, I don't know yet. But I do see that this is a place where the tide has turned for Chipotle, and I want to see if it's going to hold. So he says definitely a stock for his watch. Yes, it's on a long-term downtrend. Yes, I mean for the past 3 months it's been on a downtrend. I don't know if you can say that's long-term. That's a short-term downtrend. It's trending downward now, yes, but it's made a turn. I guess when you say long-term, I mean, what is your definition of long-term? Yes. Okay. Yes. Crossing the bearish territory. Right. So as we look at the indicators, it's over into the bearish territory. And this is just the one place where we see a sign of life, so to speak, for Chipotle. Now, I kind of just talked about this or bring this up. Again, I'm not giving any props here. Oh, there he is. Oh, he's back. Oh, you finally joined us again, Mr. VP. I know you'd be like, don't be calling me out like that. But yeah, I'm back, man. I had to talk to you. When are y'all gonna put a stock tag, stock market, what is it called? Hashtag or something, so I can tell people when I set soon. I don't like the word soon, man. I like now, like tomorrow, like. All right. So Chipotle again, yes, it's in the it's a bearish territory. It's trending downward, but we now are starting to see some signs of life for Chipotle at the $400 per share mark. If this is a company that you've been watching, that you've been interested in investing in, for me, this is the area. This is the price range that I really want to be watching Chipotle to see what kind of happens with it as it bounces back and goes back up and comes back down. Yes. So yes, I know, Sean. So if you want me to keep doing these blabs and bringing all your people to this show and to talk about stocks, because we're gonna be talking about money, man, we're gonna need a hashtag. I need to be promoted, Sean, to the blab investor or something. I don't want no burrito. I'm not trying to get no E. coli. Trying to get me sick. What you trying to make me go down under? Oh man. All right. So Sean, let me ask you a question while you're here, man. How do you what determines people getting shown on the front page or whatever? Like when you log in the blab, you have a partnership. I didn't get called, man. I didn't have that conversation. I wasn't a part of that. I wasn't a part of that boardroom meeting. I feel a little slighted here, brother. All right, so we're talking about Chipotle, man. So that's what's up. So we've looked at the S&P 500, looked at the Dow Jones Industrial Average, we looked at Walmart, we looked at Chipotle. Is everybody? Are you guys getting something out of this? I'm just running through some charts and just kind of sharing my thoughts, man. You guys getting some stuff out of that? Because for those that have watched me before, I mentioned again, I talked to y'all about Walmart. I don't know how many guys remember, but yeah, I had that conversation, and I'm not saying I was spot on, but I might have been a little right. All right. So now let's look at Apple, man. That's the last one on my list. And I know somebody mentioned Tesla. Maybe I'll try to look at that as well. So Apple. Apple, I'm just looking at 6-month charts, guys. I can look at longer charts you guys want, but we clearly have seen Apple decline over the past 6 months, 24%. We clearly seen Apple decline over the past 6 months, 24%. Over the past year, it's been down 10%. But the great thing, what I love about Apple is one, they're the number one company in the world. So I'm not betting against Apple. But number two, Apple is trading at a great value right now. So if someone was to tell me that I could buy Apple right now for $97 a share, I would buy Apple right now. They're trading at a great value. Right now, their PE ratio is at 10. The market's PE ratio is at 18. It means that they are trading below market value. EPS is 9.22. You're looking at the number one company in the world right now is trading at a PE of 10.53. Look at Chipotle, which we just looked at. They're trading at 28.5 price to earnings. So when we look at Apple, we see their MACD right now is beginning to turn. They've been trading in the bearish side of the market as well. Obviously, they've been losing steam. But Apple is Apple is the number one company in the world. If Apple should go down, then the market goes down. That's just what it is. Well, I'm comparing Apple and I mentioned Apple and Chipotle because of their PE ratios. And I'm not comparing Apple to Chipotle. I'm comparing Apple to the market. So I said Apple is trading at 10 PE. The market itself is trading at 18, and Chipotle is trading at 28. So I'm just comparing both of those companies to the market itself because they are both part of the market. Yes, they're different industries, and we can compare Apple to all of the other companies in this industry, but we know that Apple is this industry leader for its industry. And again, I believe that Apple is trading at a very, very solid value. What also did we see? We also saw that Apple blew the roof off the. They killed it during sales as well. So we see that last time we saw Apple hit historic sales, they took off after their earnings came out. Next time we see Apple had another huge selling season during the holiday season as well. So I'm expecting Apple to take off again once their earnings come out. Matter of fact, the earnings are coming out again January 26th. So we're talking about 8 days away. So I would expect that in 8 days from today, when earnings come out, we're going to see Apple back on the rise. If you are an options player and you believe that, that's going to be a great time for you to make some money. If you're saying, hey, I'm going to go put a call option on Apple through its earnings season, and you believe that its record sales that it's had again is going to boost its stock price, then that's going to be this is a great time for you to get into Apple, even if you're just long term. We've seen Apple trading all the way up at $130 a share. And my question is this: if it's been trading $130 a share and is now trading at $97 a share, what has changed in Apple? Is it not the same great company that it was when it was trading at $130 a share? Did something happen to the iPhone or the iPad? What has happened at Apple to cause it to go on decline that it's on right now, where it was once trading at $130 a share, is now trading at $97 a share. So you're saying that Apple hasn't had any innovation in the past, what are we talking about, in the past year, right? Not in 5 years? Well, you can't say, okay, so if we say that sales have been disappointing, but we just have reports that sales have been through the roof, then I think that's a misnomer. If we say there's been no innovation in 5 years, but they just came out with the iPhone 6, and that had record sales for its iPhone 6, and it's got an iWatch and all this other stuff going on Apple Pay, and there's no innovation, I think that's a misnomer as well. Apple TV, I think that's a misnomer. If we say, so that doesn't make so. All right. So here's the deal, guys. If we say that there's no innovation at Apple, we say that they're following Samsung, but Apple continues to have people sitting outside of their stores buying their products, regardless of the innovation or not. People love Apple. That's just like saying that Nike has no innovation, but people are still buying Nike. So regardless of the innovation, regardless if they're first or last in making the product, guess what? They have a following that continues to buy Apple products. Why? Because Apple has its own ecosystem. If you are, matter of fact, Apple just came out with the ability for you to go live on Facebook. If that's not innovation, so that's going to take away from people that are using Periscope. People are going to switch from being on Periscope to being on using their iPhone so they can go live on Facebook. So if we're saying no innovation, I think that's kind of a tough thing to say when we still have people standing outside for 3 days to buy some Apple product. Regardless of the innovation, people are still lining up to buy from this company. Do you see anybody standing outside of a Samsung store for 3 days to buy a Samsung Galaxy? I don't see that happening. So for me, we can talk about innovation, or we can talk about sales. We can talk about profitability. We can talk about the value of a company that, even though they may not have made anything recently, they continue to sell their products. And we know that Christmas just passed, and we have reports that they've done well with their sales. And at the end of the day, I'm going to ask you this, Sean. You're a VP of this great platform that we're on. What's your number one goal? Isn't your number one goal to be profitable? Yeah, they're still a leader in technology. You know, your number one goal is really, as a business, is to, I'm not gonna say your number one goal, but you want to remain, one of your goals is to be profitable. I'm not gonna say it's number one. Your number one is probably to serve as many people as you can serve, but you want to be profitable. Has not Apple found a way to be one of the most profitable companies in the world, regardless of the times within its sales cycle? So we know this was what happened when the Apple iPhone 6 came out, right? We saw the same thing. We saw that there was a lull in people investing in Apple as they anticipated and waited for the iPhone 6 to come out. When the iPhone 6 came out, it wasn't until their earnings report came out that people jumped back on Apple, and we saw that 10 to 20% jump in their share price after they split last year. Same kind of thing we very similar thing that we might see this year. In 8 days, they're going to report, and my anticipation is they're going to beat earnings and they're going to recover from their short decline. That's all I'm saying. Are you Solutions Turk? Come on now. Are we really comparing BlackBerry to Apple? Seriously? Did BlackBerry have anything other than a phone? Okay, you guys are okay. You know what? Let me just say this. Apple is the #1 company in the world. Is that not true? So until some other company become the #1 company in the world, I'm going with the #1 company in the world. That's all I'm saying. Show me another #1 company. It's only one. So, oh, really? Wow, are you guys serious? So so let me ask you this: if you had your $10,000 right now, are you investing in Samsung or are you investing in Apple? I know you guys want to have a conversation, want to compare, contrast, and have the debate. But if it's your money right now, which company are you investing in, Samsung or Apple? Oh, go with the flow, buddy. Go with the flow. So anyway, yeah, I'll let you guys have that. I'll let you guys have that, man. Yeah, I don't. Yeah, good luck with that, brother. But yeah, Samsung is trading at a low valuation for its PE ratio. I believe that when their earnings come out in 8 days, we'll see a return of Apple. It's not, to me, it's not a debate because I'm not. I know where I'm going with my money. I know what has made people a lot of money over the long term, and I know that they continue to invest in R&D. We may not necessarily, everything that they put out, right, may not necessarily be successful, because that's what research and development is, right? Every time that you develop something, it doesn't necessarily mean it'll be successful, but you continue to try to move the needle, when you develop products and services, and it's funny to me because what we look at with Apple, what we see is that we have Apple and we have Android. So you got Apple all by itself, its own little ecosystem, and then you got Android, which includes all of these other companies that are using this software. But Apple has its own ecosystem. So when you become an Apple user, you become an Apple user for all of your stuff. And that's called brand loyalty, man. And they continue to be good at keeping their customers, because it can be daunting, or it can be difficult for people to switch platforms, to switch, their whole ecosystem because of a phone or because of their whatever they do. So, so you're really looking at, and then when you look at apps, right, they say you make an apps for Apple or you make an apps for Android. You know what I mean? Like Apple has its brand, it has branded itself through all of these different spaces of technology that you literally are either doing one for Apple or you're doing something for all of the others. So again, it's at the top of the mountain, man. And if me personally, if I was going to put my money on something, if it was my last $100, I'm investing in the #1 company in the world. That's just me. But that's why this is my blab, because I can share my thoughts. And you guys can too. So I'm glad that you guys are getting engaged. I still don't have 1,000 likes. But in 8 days, we'll see. We'll see what happens. We'll see what happens with the earnings. We'll see. Yeah, that's right. You're here to make money. So what are you saying? Yeah, it's a safe bet. Well, Apple has made plenty of people money over these past 8 years. They continue to pay a dividend. They're a strong company. Again, I just see value there. That's just me. You guys may not see value there, and that's fine. That's why you invest your money and I invest mine. But I'm starting to see a turn in the MACD, and I'm believing that I'm believing that once the earnings come out, what is my time frame for? I'm a long-term investor, so I believe we'll see the turn of Apple from its short-term decline here once earnings come out. Did that answer your question? So if I get in at $100 right now, seeing it jump back up to 120 over the next 6 months, that's 20% return or 18% return, something like that. I'm good with that. I'm good with getting 18% return in 6 months. We did all of that, and you just not coming back to say. Were you saying? Are you thinking that I was coming from a tomorrow standpoint or something like that? So yeah. So let me clarify my position. So I'm a long-term trader. So typically, that's why I said. So this is kind of important, guys, to talk about, because depending on what type of trader you are, you'll have a different opinion on which way you want to go with the trade, right? So if I'm looking long term, if I'm looking at holding Apple, if I'm looking at taking advantage of its dividends and taking advantage of hopefully its appreciation, then I'm looking at long-term growth. I'm looking at appreciation. But time frame is everything. If I'm saying, hey, I want to get in something now and get out tomorrow, then that changes my whole perspective on no, it's all good, man. I know we have fun. If I want to get in and get out of something, if I want to be a trader, if I want to pay, additional commissions to get in and out of positions, then that changes how I look at a company. I'm no longer looking at it from a long-term perspective. I'm looking at it from a shorter-term perspective, which is going to change how I evaluate the direction, the momentum, the price, and the volume of that company as well. So we can look at it from a short-term position as well, but I'm just initially, when I'm looking at something, I'm looking at something for the long term. Yes, I generally do reinvest my dividends for a long-term stock. So here's what we got here, guys. We got some people here that are investors, some people that are traders. Depending on what you're looking to accomplish, this is going to depend on what type of moves that you're going to make and what type of investor that you like to be. Generally, I can do both, but I am generally a long-term investor until I see a great opportunity to go short-term and make some quick money. But I'm not the person that's going to be in the market every day making trades and paying, more and more trading commissions in order to be that involved in the market. I'd rather get something, hold on to it, and over the long term make money. I'm just more of a Warren Buffett type of person. But I do see opportunities like we saw with Chipotle, like we've seen over the past couple of months to go short on the market itself. That's a huge opportunity for people to have made some money. And I still believe that the market is still on a downward trend. So those are things that I would have taken advantage of and put my money in on that side of the market, because that's what the trend, that's what the chart was telling me. Hell no, I hate Sprint. Let me look at Sprint. I haven't even looked at Sprint since that guy talked to me, man. I told y'all what I thought about Sprint. People always bring Sprint up. And guess where Sprint is right now? What? Oh my goodness. Okay, so in case you guys don't know, I'm gonna share this with you guys. Again, who was here last time we talked about Sprint? And I told Sprint, and I said that I'm not a believer in Sprint, that Sprint can't seem to hold their customers. They are trying, this was back when NBA playoffs was down. I said they were trying to buy people out of their contracts just to get them as customers. This was back in December. But it wasn't playoffs time, back in December, right? NBA playoffs or something. No, this was way back in, this was around NBA playoffs and the Golden State was winning. What was that, summer? So this was back when Sprint was trading about $4.50 or $5 a share. Sprint is now trading at $2.87 a share. So just imagine if I listened to this individual who was saying that Sprint is a good buy right now and go long term on Sprint. Look how much money I would have lost. I would have lost 50% of my investment. Now, I could have been on that side and say, hey, I hate Sprint. I don't believe Sprint is going anywhere. And I can invest on the short side of Sprint and been making money while it continues to decline. That's what I could have done as well. So Sprint has been on decline, and I'm of the mindset that Sprint is getting close to going out of business. This is my opinion, or they're getting close to being bought out, being merged, or something like that's going to happen. I don't know what's going to happen, but to me, they're just not a good company. And I don't know anybody that has anything good to say about Sprint. Just my personal opinion. I haven't seen anybody be like, "Oh, I love Sprint." Yeah, they sold all them iPhones to people with bad credit. So I don't know why you brought this up, but you could have done stop loss. We haven't even talked about that stuff yet, man. I just try to talk to people about. To me, I just try to talk common sense. To me, I was like, "What's attractive about Sprint?" No, it's cool, man. They need to know about that stuff. What was attractive about Sprint back in the summer when Golden State was winning the championship, and even when I talked about it a few months ago when they were at $4.50, I still didn't see anything attractive that told me that Sprint was going to find a way to get more subscribers. Because at the end of the day, that's what it is for Sprint. They have to penetrate more market share, have more people say good things about them, have more people sign up for Sprint contracts for them to actually do better. I haven't seen Sprint learn how to make money, where I've seen Apple learn how to make money, and that was my thing. How do you make money on a declining stock? Well, I could have easily have bet on my belief that Sprint was going to continue to decline, and I could have shorted Sprint, or I could have bought put options on Sprint, and that would have actually made me money on its way down. That's a whole other thing that's kind of hard to go through and explain right now. It's 10:30. I didn't even expect to be on here this long. But people make more money on the way down than they do on the way up. I said that earlier. People make more money on the way down than they do on the way up because it's easier to fall than it is to climb. You can fall a lot quicker and faster and make money quicker on the way when things are going down. We've seen that. We look at the S&P 500. When it started to fall, it falls fast. When it starts to go back up, it goes back up slow. So, here's the thing. In the short term. When are we covering that? I don't know. Whenever I just talk about whatever comes up. So here's the deal, guys. So we had the conversation about Walmart. We've had the conversation today about Apple. So in 8 days, we're gonna see what happens with Apple. And then we're going to get back on. We're going to talk about it. I'm going to see if I'm going to have a happy face or the boo-boo face. Right now, Apple is at $97 a share. I'm saying that I find it a great value at this price, $97, $95, whatever. And we're going to see what happens after earnings come out in 8 days. And then we're going to see what happens. And we're going to see. We're just going to see. I mean, this is what it's talking for, is to have the intellectual conversation about money, to make some educated guesses or forecast what's going to happen in the future, and then to see if you're right. If you're right, you win. If you're right, you win. If you're not, you put things into place to make sure you don't lose that much, and that's what he was talking about with stop losses or stops and things like that. So the good thing is if you're right more often than you're wrong, then you're going to find yourself in a good position with your money. You're going to be wrong sometimes. I could definitely be wrong when it comes to Apple. We'll see. But it still doesn't change my opinion that it's a great value to buy right now. It doesn't change my opinion. Even if it continues to decline in the short term, I still believe long term that Apple is a great value at its current price. That's just what it is. So last thing, I'll look at Tesla for you. I know you asked about Tesla. I didn't really have that on my radar to look at. And again, I'm just looking at 6-month charts. I haven't Tesla's on the decline. What was your question about Tesla again, Ryan? You still there? Yeah, you still there. My opinion on, okay, so one thing about Tesla's a cult stock, I believe. When people get into Tesla, they get into Tesla. We've seen over the past year, Tesla trading as high as 275. They've been down to 204. Over the past 6 months, they've lost 23% of their value, going from that 275 marker down to 205. So they've been on the decline. When I look at Tesla, they haven't learned how to make money yet. I haven't even gotten to looking at the financials or fundamental analysis. I'm just doing technical analysis today. Just basically looking at a chart. I see for the past couple of days, they've had 2 green days. I'm still not a believer in them. I see their MACD is still on the decline, still in the bearish mode. MF5 money flow is still bearish. RSI is still bearish, not looking to see the turn just yet. So what you're talking about, the car that's coming out, when is the car coming out? When is it expected to release? Because right now I'm saying I'm short on Tesla. I still be shorting Tesla right now. I still be on the put side. Well, that's relative, Solution Church. Their cars costing too much is relative. People still buy them. So that's relative. When's the car coming out? Do you know? Ryan? You know what? I'm through with you, man. This year, it's January. This year, it could be December 31st. I'm just messing with you, man. Let me make sure I follow you, man. You cool. You good guy. So it's coming out in a couple months. All right, cool. So typically when cars come out, or when the car comes out, they're expected to do their earnings in February. We're not going to really see the impact of this car, or we're not going to see the impact on earnings or the impact on profitability of this car until May, June, July. We're not going to see the impact really till August. As far as it's priced into the market what they anticipate, right? But we'll see their expectations versus reality when their earnings come out. So if we say, like, you're right. So if it's priced into the market, they're now trading at 205. The car comes out in March. If they sell more than they anticipate, or they do better than they anticipate, then that would cause pretty much money to start flowing back in Tesla. But when would we see that? When will we really be able to see that they've done a lot better? Obviously, there's some sales reports that come out, but they typically will show all of that when they release their earnings over that next. Well, I don't know. I'm just having the conversations for Ryan. I'm just trying to build a case for us to have something to think about. Brian said he wanted to look at Tesla, so let's try to help the dude out and give him some logical things to consider. So no, it's cool. Everyone is you're supposed to be sharing your opinion. So that's what this forum is for. It's called Blab Talk. So my what is your anticipation of Tesla? So if you feel like this car that comes out is going to make a huge impact, and now when we talk about a car coming out and being driverless, is it going to have a bigger impact for Tesla, or is it going to have a bigger impact for those companies that make the driverless technology? I think we got what is it, Eagle Eye or something like, I don't know. We got a couple of different companies that make driverless, that are the driverless technology, and what kind of impact do you believe that it'll have on the stock after it does its sales? Are you thinking, okay, well, this car is going to cause Tesla to start trading back at $300 a share, where it's currently at $200, currently at $200 a share, or are you thinking that it's going to have minimal impact and cause it to, cause it to have a sideways consolidation? The first, when you say the first affordable car, you're saying the first affordable Tesla or the first affordable driverless car? Okay, I got you. Okay, so you're saying so you're a believer in Elon Musk, you're a believer in Tesla, you believe in his innovation, his drive, his research. You believe that this car, being the first affordable driverless car, is going to set the standard in the market, and you believe that many people are going to gravitate towards this car over all of the other affordable cars that are in the market because it's one of a kind and it's the first of its kind. But then you got to also ask yourself, like, I'm a fan, but typically when something is first, that's good, but it also has to go through its first difficulties, its first recalls, its first problems, its first issues as well. So, I don't know. Me personally, I'm a big believer in Elon Musk. I'm not necessarily a big believer in Tesla as far as making me money. And it's only because I haven't seen Tesla make any money. I've seen them grow. I've seen the cult push behind them, and I've seen them have belief in the company itself, but I have yet to see Tesla itself make any money. Now, what do I mean by that? Well, when I look at its sales, Tesla last year or last month in September, it sold $936,000 worth of merchandise, worth of product, right? It sold that much product. But at the end of the day, they netted their profit after selling $936,000 worth of product. Their profit was negative $229,800. And it's been negative for the past 4 quarters, their net profit. So Tesla is running off of borrowed dollars. They haven't found a way, in my opinion, for what I've seen, they haven't found a way to have a positive cash flow. For me, I'm not interested in a company that doesn't know how to make money. So for me, I'm just saying that it's not that it's a bad company. It's not that they won't learn how to make money. They haven't been around long, and sometimes it takes a while before you get to the positive side of the cash flow. But with a company this hyped up, with a company that has this type of leader that's focused on research and development, which is probably where most of their money is going as they're trying to grow, to not have figured out how to make money at this stage in the game, it concerns me. For a company that's been trading at $300 a share, and people are way behind a company that still has not learned how to make money, how to be profitable. Not make money. They haven't learned how to be profitable yet. So the Model 3, I don't know how much it's going to cost them to make it. I don't know how many they're going to sell. Maybe it will move them into profitable status. And I can guarantee you, if that quarter or the quarter after, when they show profit, if they show profit, then the stock will take off. But I'm willing to wait until I see that and ride that wave up, than to hope that it happens and find myself with no wave to ride but down, or sideways, or whatever the case may be. So that's just my take on it. I mean, it's just my thoughts. Nothing against the company, nothing against the car. I think they're cool cars and things like that. But they're doing things differently. They're innovative. And we talked about innovation and stuff like that. But to me, the nuts and bolts is, for the past 4 quarters, negative 107, negative 154, negative 184, negative 229. That's going in the wrong direction to me. The numbers is the numbers, in my opinion. If you had a company, if I have a company that has those kind of numbers, would you be investing in me? I don't think so. I only got like 3 likes on that. Like, for real. Like, if I came to you right now with a balance sheet that said net income for the past 4 quarters, negative 107, negative 154, negative 184, negative 229,000. Would you be investing in me? Would you be investing in my company? If I came to you with a profit loss statement over the past 3 years, and I came to you and said negative 396, negative 74, negative 294, would you be investing in me? And I'm with you. Investing long term, that's great. But with you investing in long term, you're saying, I hope that one day this company can turn their profitability around. That's hope. That's a hunch. That's you're making a guess. It's not off sound numbers. You're gambling. So you're saying I'm a long-term investor, and I'm not saying that they won't turn it around. I'm just saying, what are the signs that they have shown that they can't? They haven't had one profitable quarter in the past year. They haven't had one profitable year in the past 3 years. So if I think you're just talking, but if it's something that you believe in, which is something like to sound like you're doing, that's cool. I mean, go for it. I just don't see the data behind it that would tell me that, it's where I want to put my money right now. Not that it won't in the future. And when this new car comes out and I might be like, oh man, they made $100,000. They finally turned it around. Then I could see myself getting behind a company like that. But for me right now, from a long-term perspective, it doesn't interest me. And it doesn't interest me at $200 a share when I can buy an Apple that's going to pay me dividends and pay $97 a share. You know what I mean? You can have the growth company. I'll take the company that continues to perform and that continues to pay out and continues to bring me profitability. I'll take that sure bet. I'm not going to say if it's sure, but I'll take that. I would rather have that and be confident in that than to have this and just hope for the best. I'm confident in that. So, but maybe I'm an Apple guy. Maybe I'm biased. I'm really not, because I've shorted Apple before. But I'd rather take that company that's going to pay me dividends that I believe is at a value right now, that's shown me that they can make money time and time again, than to go with a hunch with this company, which has shown that they haven't learned how to make money, but they continue to borrow in order to. You can't borrow your way. You don't really borrow your way to riches, but they're trying, and I think that maybe they'll get there. Hey, Cody, thanks for trying to join in. I'm about to wrap this thing up. I appreciate you. You have to catch us on the next go round. Appreciate you joining in, though, brother. Cody Blake Little, Scott A. So you know what? When do you guys want me to do this again? Because I just kind of just jump on and do it. I don't really announce it. Typically, when I announce it, it doesn't happen. When I just decide I get the compass in the field to do it, that's when I do it. When you guys want to do it again? What? Tomorrow, opening bell. Oh, I got business to take care of, brother. Turk, man. You guys like Monday? Yes, I'm a trader. Monday nights. I think Mondays are better for me than Tuesdays. I was doing Tuesday talks, so we might do Mondays. I don't know if I'm gonna do them every Monday or not. But this may be something that replaces what I used to do, or be in conjunction with what I used to do on Monday. So you said don't stutter. Oh, okay. So you're gonna do two? Okay, that's cool. That's cool. If you want to do Tuesdays, I'll look to do mine on Mondays, and then we can support one another. Robinhood. Okay, you got a Robinhood app? We can do one. I mean, it don't matter to me, man. He's on here. Have you done a blab yet, Kamari? Oh yeah, okay. That's cool. So yeah, man. But yeah, it's good to have different opinions and different viewpoints. Oh, you do so well then. Well, I'm not gonna do Mondays then. I'll just jump on yours. Do you get a lot of what's your what's your you get you the king, so you get a lot of viewers on your Mondays. You got a lot of views on your Monday. Yeah, you can jump in real quick. Absolutely. Well, I wasn't saying I wasn't going to do Mondays, Cookie. I was saying I might stick to the other platform that we do on Mondays, and I might jump on, jump on and do Blab on Monday. That doesn't mean we won't do things on Monday. What's up, Kamar?
How you doing, Evan?
Good, man. How about yourself?
Good. Listen, don't not do Monday. We do Money Mondays from 7:30 to 8:30, and the show's a little bit different than yours. I love what you're doing. So don't not do it because we're doing it. I seen you on here before, and we're in a group on Facebook together. We've talked.
Yeah.
I think it's Black Stockholders.
Yeah.
Yeah. So I've been toying around a day I would do for purely stock. So on Money Mondays, my partner is Eddie Colson. He does real estate. So we kind of go back and forth about real estate and stock and everything else is going on. But I've been dying to do a show strictly about stock in the markets.
Okay.
So we'll figure it out. Yeah. Stock market 2016 is cool. I have a group on there also, Stock Market Tigers. Stock market 2016 is really more traders. And I love the guys in there. They are very into their trading. But over in the Tiger group, we are more about long-term trading. But yeah, we definitely can do something together. I'm all for the educational part of it. So I love doing that. Whatever you want to do.
So you do yours on Monday, 7:30 to 8:30. So if I did mine, it'd be at 9 o'clock anyway. So that won't be a conflict.
Yeah. And I'll try to come on. I just followed you, so just let me know every time you come on.
Cool, man. Well, yeah. So guys, I'm not committing to it yet, but I.
Come on, bro. Commit, man. Commit.
Nah, man, because and people be like, "Why you ain't start? Why you come on?"
You need an accountability partner.
Huh?
You need an accountability partner.
Yeah, I got accountability. There's a whole bunch of accountability partners on here. So 9 o'clock is not really bad for me. I'll know by this weekend if it's going to be an every Monday thing or not. But what I am saying, when I do come on and start talking about stocks, it's going to be on Mondays at 9 o'clock. Hey, yes, the goal for this year is my first paid speaking engagement. So you guys, you guys follow me. So it's not necessarily about stocks. I do a lot of other stuff. So we'll look to, when I do come on and talk about stocks, because everybody want me to come on and talk about money. When I come on and talk about stocks, it'll be Stock Market Monday. I'm not going to commit to every week just yet. But when I do it, it's going to be on Mondays at 9 o'clock. So for those that are here, you make sure you follow me. Kamari, he has a show on Mondays, looks like at 7:30, where he talks about stocks and real estate. So you want to follow him as well. So if you want to talk about, what are we talking about, guys? So here's the deal. When we're talking about stocks, we're talking about real estate. What we're talking about is building wealth at the end of the day. So if you have the interest to learn how to build wealth and acquire assets, that's what we're talking about, asset accumulation. This is where you want to be. You want to have the conversation. You want to be around the crowd that is concerned about asset accumulation, because that ultimately is what pretty much drives wealth in the United States and around the world. Acquiring assets. You want to have more assets than liabilities. You want to build your net worth, and the way to do that is through stocks, primarily in real estate. So why not be around the conversation? Why not engulf in some of this discussion and free education before it's no longer free? I mean, because at the end of the day, it can't be free forever, because if you're getting value, then there should be some value that you're giving in return. And that's where the donations and things like that come from. Thanks so much, Ryan. So anyway, so Mondays at 9 o'clock, I'm going to write it down, and then I'll let you guys, I will be back next Monday. Okay. I'll be back next Monday. I don't know what I'm talking about just yet. I'll be back next Monday, and I'm pretty sure I'll find something to discuss, because it's a lot. It's a lot of stuff to talk about. So, Kamar, you got anything, man, before we wrap this thing up?
I was just curious, what part of the country are you in?
I'm in Atlanta, Georgia.
Okay, down in the A. All right, yeah. That works.
Yeah. So
Okay.
last
Well,
time I
if
did
you're
this,
on,
I had like 700 people tune in, so it was pretty interesting.
yeah, that's cool. That's cool.
So,
If you're going to do it next Monday, I'll be here next Monday.
all right, cool, man. So, guys, if you are just tune in next week again, if you have a retirement 401k, something like that, right, and you need to get it right, you need to hit me up, and I can help you to make sure that your allocations are set according to your risk profile and that you understand what's going on in the market. That's very important. HSA is pretty cool. We can talk about that, man. If you guys are at HSA, at any rate, there's some cool things that you can do with HSA as well that most people don't know. You can actually invest with your HSA as well, and you can do it tax-free. Some people don't know that either. So there's some cool things that I know that I just love to share with people and make sure that you're maximizing and you're making the most out of your money. You're making your money work for you. And so if you want to take advantage of making sure that your retirement accounts are squared and that you understand them and you're doing what's best for them, then you want to sign up for the retirement review. It's $97. It's a one-on-one consultation where I'll walk you through everything that you need to know about your money. And you can just hit me up and we'll set it up. Anyway, that's our time tonight, man. I'm glad that hope you guys enjoyed it. Hopefully I didn't ramble too much. I finally got to 1,000 likes, so I feel like I made it. And we'll be back next Monday at 9 o'clock. And Kamara will be chatting through Facebook and things like that.
Yes, sir.
Hey, you guys have a good night, man. It was fun.